Alright guys, welcome to Tesla update TSLA. Today it's down 8%. Basically it's doing exactly what we were talking about. Flushing pretty much with higher, pretty much faster pace than it was coming down before. So what I'm watching here from basically this 113.50, that's where it's trading today. All-time lows today was basically 52-week lows 111.85. So I want to show you something else. So I'm gonna switch to daily chart. A lot of people are not good bearish traders. Mostly people are like 70-80% of people are bullish traders, and a lot of times when people look at these downtrending stocks, I just tell them to flip the chart. So if you are super bullish trader and you are good at recognizing the patterns to the upside, just flip the chart, right? So if you flip the chart, look what Tesla is doing, right? This is basically inverse, and you could be saying, okay, it's uptrending, it's going really good, momentum is strong, any pullback I'm gonna buy. Same thing with the shorts. Anytime it just has a dead cat bounce, which means a dip right here on inverse, they're gonna short it. And basically from here, I just wanna keep it short. And this is something I'm watching like this. Basically, this is inverse chart, right? So if you look at this inverse chart, you can see last time Tesla had a rally, this is inverse, just remember that, right? It did go all the way to $1 trillion very fast in about like very short amount of time. So let's measure like this move from right here all the way 44%. So let me go back just to show you, just not to confuse a lot of people here. So this is a daily chart, right? Normal chart from basically 275 all the way to 414. It did happen very fast after earnings, 50% move in about 23 days. Right? And see what happens afterwards. Distribution. All right. Pretty much anytime you see stock overextended to the upside or overextended to the downside, that's what you will see at the top. Volatility, up and down, range bound. Same thing at the bottom. So basically this move to the downside for the past, let's just measure, since it cracked this support, it took basically 18 days for Tesla to come down 38%. Yes, that's a lot. It did wipe out a lot of pretty much market capitalization. So from here, basically, I'm watching a little bit more, maybe flash. Psychological level would be $100, but I'm watching these support levels from 2020, basically. So I'm watching from here now as a support 110, all right, and then below that would be $90, and again $100 as a psychological. So we can definitely stuff at that 110 and get a really decent dead cat bounce or relief bounce and pretty much chop around, or having pretty much epic like 10-20% maybe even move squeeze to the upside. So you don't want to underestimate it. Counter moves. So let's say it hits 110, flushes 110 and has 20% move, it wouldn't go too far. It would go all the way to 134. So to the upside, I would be watching this support right here, 122, that it did gap down below this level basically overnight. That would be the next resistance, and then another resistance 135 to the upside. If you look at the moving averages from here, you can see it's pretty overextended to the downside. Anytime you see a stock, so this yellow line, 50-day moving average, anytime stock gets overextended from its 50-day moving average, like 20% usually is overextension, whether its stock is above that 50-day or below it. So at the moment, it's basically 39% below its 50-day simple moving average. So I'm expecting some sort of a relief bounce. It doesn't have to be epic, strong move. It could do something like this, right? it could be something like this. Okay, so basically I think we are near it. Stocks don't go like straight down to zero like this, or like doesn't wipe out 90% like this, especially like blue chip stocks. But that's what I'm watching. And another stock basically I have watched, I have a little bit of a theory when it comes to like stocks joining S&P 500 and basically doing something like this. If you want to watch Penn National, Penn basically repeating, Tesla is repeating exactly same pattern after they joined S&P 500 right at the top of its price, and now it's sitting at $30. So I don't want to call S&P 500 ETF and all that ETF investing scam, but it does, like when you see stocks like this that join it at the top of its range and then gets distributed and they accumulate ETFs, and because ETFs are owned by many funds, right, including so many mutual funds, pension funds, I mean, you get a question like why the hell it has to come into the S&P 500 at these ridiculous levels and get distributed throughout. So basically just correlate these two, and I think it can do similar thing as Penn did. And there are many other stocks. I can just give an example that did go into join basically S&P 500. Like one of them would be Match Group, another one, right, on top of its price, and look where it is right now. So basically those are the technical levels I'm watching, not an advice, but I'm watching for some sort of a relief bounce at these low $100 levels. Thanks for watching. Take care. Peace.